welcome to the Alex Auto YouTube channel. All right, welcome to the live. Today we got a few things that we're gonna talk about. All right, so without any further delay, I'm gonna go ahead and share my screen. On this live, we're gonna talk extensively about the banks today. Okay, so a lot of people don't understand how money actually works, how banking actually works. So on this live, I'll break down how all of that works. Okay, we'll talk about the federal. We're gonna talk about the fractional reserve banking, and we're gonna talk about interest rates. And yeah, I'm gonna break everything down on this live. So without any further delay, I was gonna go ahead and share my screen. Cool. So as you can see here, and then let me make sure I show myself. As you can see here, we're exposing the banks today. All right, we're exposing all the secrets of the banks, all the traps that they set for us, right? Everything and anything that is involved with banking, credit, money, okay? People need to understand this. It's very important that you understand how money works, how the banking system works, how credit works. That way, you guys actually know, right, where to position yourself when it comes to building a business. All right, so I'll get right into the presentation. Fractional reserve banking. Okay, we'll talk about fractional reserve banking. What actually is fractional reserve banking? Fractional reserve banking is basically where the banks create money with debt. Okay, they create money out of thin air using debt. All right, and a lot of people don't understand that money actually is debt. Money isn't real in itself. Okay, money doesn't have any intrinsic value. It's just a medium of exchange, and the way money is created is through debt. Okay. The fractional reserve banking has requirements, okay? So this means that every dollar that you deposit in the bank, they have a requirement on how much money they could lend. And historically, it was 10%, okay? So at 10%, every dollar that you deposit into the bank, right? The bank is allowed to lend 90%, okay? So they have to reserve 10%. So if you put a dollar in, that means that they can reserve your dollar and lend it $9. Okay? A lot of people don't actually know this, but this is how it actually works. So each dollar that you deposit into a bank, the bank can lend up to $9. Think about that. That's crazy. Okay? So basically, the bank is taking your money, right? And they're lending it out to other people and making money on interest. Okay? Interest, fees, and those kind of things. And now, as of March 2020, the reserve requirement is 0%. That's crazy, which means that now they don't even have to have an amount of money in reserves. They can lend any amount of money that they want. All right, that's absolutely insane. And that's actually scary. This means that the bank there's no limitations to how much money the bank can lend. And once you realize that there's no limitations to how much money the banks can lend, you realize that you're playing a very different game, okay? So it's very important that we understand how fractional reserve banking works, and we understand that the bank is allowed to lend basically 90% of what they have in reserves. So if you put a dollar in the bank, they can lend $9 on each dollar that's deposited, all right? And as of 2020, there's no requirement, okay? So they don't even need money in the bank to lend money. And the banks make money in multiple ways, and we're going to talk about it. Okay, so how do the banks actually profit? All right, how do the banks actually make money off of people depositing money in there? All right, so there's three main streams of profit that the banks make money from. Okay, so let's talk about number one, interest. This is very common. Everybody knows this. Well, at least everybody should know this, that the banks make money primarily off of interest. Okay, which means anything they charge you on loans, any interest they charge you on mortgages, any interest they charge you on auto loans, any interest they charge you on credit cards, they make a lot of money from that. All right. So, as a consumer, right, as a business owner, as an entrepreneur, you understand that the interest is where the banks are making money. So you have to make sure you put yourself in a position where you pay as little interest as possible. All right. And there's a lot of techniques and hacks that you can use to get yourself out of paying interest to the banks. Okay. Now, these are the types of loans, the types of products that the banks makes interest from, right? We talked about loans, right? Liquid, right? Liquid loans, personal loans, anything that they deposit cash into your bank accounts, all right? Then you have mortgages, Mortgages are one of the highest ways the banks makes money off interest. They love mortgages because it's amortized over 30 years. They make interest for 30 years, 30 freaking years. That's all that they love. They love that product. That's why they push it so much. That's why they tell people buy a house, buy a house, buy a house. They tell people it's an investment. They tell people they're building equity, right? It's not true. It's all a lie. And then you have credit cards and lines of credits. Now, credit cards, it's common knowledge that you should not be acquiring, right, credit card debt. Credit card debt is one of the worst debts you can have, okay? And credit card debt is extremely high. Most credit cards have an interest rate of like 24% and over, okay? And that's insane, all right? So that means that basically every 4 billing cycles, every 4 months, your debt would double. So if you have $100 in debt and you don't pay it off in full, every 4 months it doubles because it's 24% interest rate. Okay, so people need to understand that. So stay away from credit card debt. Now, deposits. Okay, deposits is another way the banks make a lot of money. All right, I talked about fractional reserve banking before. So each time you put money into the bank, right, you put $1 in, you lose complete ownership straight away. It's no longer your money, it's the bank's money. So now the bank can take that amount of money and go lend, right, 9 times what you gave them. So if you put $100 in, they can lend literally $900, okay? And then they can put interest on it and make money off of that. They love when people put money in the bank accounts. They love it. That's why they give things like certificate of deposits. And if you look at it, it's laughable because a certificate of deposit will have an interest rate of like 3-4%, right? And then they will go lend that money to somebody, even if it's a personal loan, right, for like 8, 9, 10%. And then they make money on the difference, okay? So they're giving you a fraction of what the money that they're making off of your deposit, okay? So very important to understand. And then fees and charges, right? In 2023 alone, U.S. banks made $11 billion in overdraft fees, okay? They make a lot of money in fees. And this is data from the CFPB. This is the Consumer Financial Protection Bureau, okay? Banks make a lot of money in fees. They love it, okay? They love when people overdraft. All right, overdraft fees don't even make any sense. So if somebody doesn't have any money, you charge them more money. It doesn't make any sense, right? But they make money from that, so they're gonna continue doing it. All right, so it's very important to understand that these are the ways that the banks make money. All right, they make money off of us. Now, the bank account illusion. I love this one, okay? A lot of people think that what's in your bank account belongs to them. What's in your bank account does not belong to you, okay? It's not yours. Okay, and we're going to talk about it. Ownership. As soon as you put money in the bank, it's no longer your money. Legally, you can look it up. Legally, it's now a bank asset. It goes onto the bank's balance sheet as an asset. Right? Now, they can take that money and go lend it and go make money on the money that you're putting in there. So all the people that are sitting there, right, saying that they're going to save their way to retirement, they're trying to save every single dollar. Right, I know you know some people out there that want to save every single dollar. You can't save your way into retirement, because that money is not yours essentially. Now you have control of the money, but you don't have ownership of the money, and that's the difference there that you need to understand. Okay, and that's why a lot of the times on social media you hear people talking about how the rich don't own anything, but they control everything. Okay, so very important. Once you deposit the money, they lend it, as I said before. Ownership versus control. You need to understand the difference, okay? Ownership. Ownership is when you own something. Technically, we don't really own anything. You don't own your house. You don't really own your cars. You don't really own your bank account. Technically, we actually never really get complete ownership of anything. And I'll give you an example. If you buy a house and you have a mortgage, you don't own it. It belongs to the bank. Even if you pay off the mortgage, well, now you have property tax. And if you don't pay your property tax, the city can auction off your house in a tax lien auction. They can put a lien on your house and then sell it to somebody at a tax lien auction for a fraction of the price, just so they can recover their money from their property taxes. And property taxes is every year. So do you really own the house? No, because you still have to pay property taxes, right? So you don't really own the house. Now let's look at a car. Even if you buy a car with cash, you still got to register it, right? You have your tag, your registration on it. You need to have that on it. And then you need to keep it up. If your registration lapses and you're driving, right, you get pulled over, they can impound your car. They can basically take your car from you. So do you really own that car? No, right? And then you look at your bank account, right? There's been a few times where there have been banking crises where whenever a lot of people try to go take money from the banks all at once, it's a problem because 99% of the time the money isn't there in its entirety. So the banks aren't going to be able to give you all your money because it's not there. So is it your money? No, not really. And then on top of that, if you do something to piss the banks off, right? I've seen this happen. People get their account shut down because they try to buy cryptocurrency or Bitcoin, and the bank thought it was fraudulent activity. Bank is shut down. All the money is locked up until they release it to you. So is it really your money? No, but you have control of it, right? So understanding how to control assets is where you put yourself in the position to take advantage of what the banks have available, right? And there's ways we can take advantage of the banks, and I'm going to talk about that. But you want to be able to control the asset, all right? So the reason why people say the rich don't own anything isn't because they don't actually physically own anything. They just don't put anything in their name. They own all their assets under their business, under LLCs, under trust, right? Under offshore account, things like that. And then they control it, right? So if it's in your LLC, let's say you have a car, you buy a cash car, you register it under your LLC, you have the keys to it, but it's technically not your car, right? It doesn't belong to Alex Auto. It belongs to some company, right? That Alex Auto controls and has the keys to. So that little separation, right, is important and will always keep you, give you the advantage, right? And it'll give you the advantage legally, right? It'll give you the advantage professionally, because at the end of the day, if something happens to you personally, right, let's say you do something to piss off the state, the government, and now they want to seize your assets. Well, they can't. They can't seize a company's assets because the company can be made up of multiple people and things like that. And especially if you put more and more layers, right, of security within that company, it's harder and harder for them to find who actually owns it. Okay? So this is all like a game, essentially. All right? But that's the difference between ownership and control. Ownership is an illusion. 100% it is. Like I said earlier, we don't really own anything, right? We really don't really own anything. All right, you might be able to own like a laptop, maybe. I'll say, maybe you can own a laptop, but you don't really actually own anything, okay? It's an illusion, all right? But the goal here is to control assets. Make sure you control all the assets possible, right? You buy the assets and you get control of it, and use those assets to make you money, right? That you control. Very, very simple. Right, and then leverage. So we're going to talk about the power of leverage, and this is where we put ourselves in position, right, to take advantage of how the banks actually work, right? The entire purpose of the bank is to make money by lending money. So we need to put ourselves in the position where we can take that money from the banks and use it to go generate more money for ourselves. All right. So borrowing rewards, right? The banks reward you. They reward us for borrowing, and I'll give you an example. If you look at things like credit cards, for example, you get cash back, you get points, you get travel, you get miles, right? All of these things on credit cards are a way you get rewarded for using the products that the banks actually want you to use, right? And then you got to be smart and make sure you're not paying interest on that card, okay? By reward points, right? You get money and points. You can travel for free by using credit. By leveraging credit cards, okay? Cashback. Cashback is another big one. There's a lot of cashback cards out there. They literally give you cashback for using these products because they want you to use the products. That's what the banks like. They want you to be able to use the products, okay? So our job is to put ourselves into position where we can take advantage and use these products, okay? All right, and then I talk about reward points, free travel, right? That's all into it. Now let's turn the bank into your business partner. How are we going to turn the banks into our business partner? Instead of just putting our money in the banks all the time, right? How do we make it so that the banks are on our side and they help us build our business? The first step is to establish good credit, okay? Establishing good credit is key. It's important to making sure that you're able to build relationships with the bank. So step one, establish good credit. And then step two will be build banking relationships. Too many people don't do this. This is a cheat code. This is building a banking relationship is a cheat code. All right. So, and it's very simple to do. Go open a checking account. Go open the savings account. Okay. Any bank you want products from, go open an account with them first, and then see if you have decent credit and you have an account with them, see how they treat you. They'll throw the bag at you. Okay. Especially you have an account, you put some money in there, here and there. All right. I have a whole bunch of accounts. I just leave a couple $1,000s in there. Right. Just because later down the line, if I want money from that bank and I go apply, I know I have a higher chance of getting approved, and I have a higher chance of getting a higher amount of money. And Navy Federal is like the best example of this. A lot of people talk about Navy Federal, right, their internal score. And that's because it's all relationship based, right? Once you have an account with them, they see you as one of their own, and then they'll treat you as such. Okay, so make sure you're building the banking relationships. Make sure we're borrowing strategically, okay? We don't just go take money and then go run up a bunch of debt. We're using money to go make more money, okay? So that's the strategy behind this, especially if we know that, okay, we can take something like a car and turn it into, $1,500, $1,600, $1,800. Okay, and we know that we can buy that car for $4,000, $5,000. Okay, now we can go to the bank, pick up, $20,000, buy 4 cars, right, and go generate $6,000 a month. And then we can pay that $20K off in 4 months, something like that, 5 months, and then do it again, and keep going. And we still keep the asset. Okay, so the entire point of borrowing is to buy the asset, pay back the money, and keep the asset. Very important. You buy the asset, right? So it's giving you the ability to buy the asset with none of your own money. So people say you need money to make money. You don't. You don't need any money to make money. You just need the right strategy, okay? Boom, and then we're investing aggressively. Once we get the money, we go out there and we buy as many of the assets as possible. Okay, once you learn the formula, it's basic math. Once you learn the formula to turn $1 into 5, now you just need a bunch of dollars. Very simple. Now because you can turn $1 into 5, you can turn 100 into 500. Now you just need a bunch of dollars. So you go to the bank and go pick up a bunch of dollars, and then go turn it into more money. Okay, and that's how you build, right? That's how you leverage the banks for your business. That's how you put your banks on your side. All right, so that's really it. That's really the entire live. I'm gonna push the community. A bunch of people have been asking me questions, so make sure you're in that community, because if you're asking me a whole bunch of questions, you should be in there. Jump in there. The link is in the bio for the Facebook group. But I'm gonna open it up now to questions. I know there's a couple people in here, so if you have any questions, feel free to drop your questions in the chat. Today might be a short live, just depending on how many questions people have. Go ahead and drop your questions in the chat, and we'll get to it. I see my guy, Moy got keys. Moy got keys. What's good, bro? What's good? I appreciate that. I appreciate the comment. All right, so I'm gonna go ahead and switch back over. If you have any questions, feel free to drop it in the chat. Drop your question in the chat. I know you guys are here for questions, so make sure you drop in those questions in the chat. All right, that's why you're here. So drop your questions. Drop your questions in the chat. But yeah, thank you for joining the live. And the entire purpose of this is a little bit of a different live, is because I really want you, the people here, my audience, I want you guys to really understand that there's levels to business. Okay, we're not just doing some side hustle thing just for extra money. Okay, we're really trying to build this thing. We're really trying to be serial business owners. And to be a serial business owner, there's levels. You need to understand the levels of the game. There's steps to everything. Okay, so step 1, okay, you can make an extra $1,000, $5,000, $10,000 a month. Okay, you're like, all right, now I want to generate millions. Okay, now when it comes time to generate millions, you need strategy and you need a system. Okay, you need a strategy, you need system, you need coaches, you need consultants, right? And then now you can put these things in place to really turn your business up. Okay, and then once you have all of that going, it's easy. Then it's super easy. So I just wanted to present you guys with this information. All right, there's levels to everything. The most important thing here is keeping your mind open. That way, when it comes time to go and generate business income, you can do it strategically and easily. All right. So that's everything. That's the lie. If you want to, feel free to drop questions in the chat. If I don't see any questions in here, I'll go ahead and end the live. I appreciate you guys for joining. Right. Thank you for being on here. Thank you for being on here every week. Some of you guys are here every single week. Okay. I appreciate y'all. And I'll see you on the next one. I'll see you next week. All right, let's go.